Hey everyone, Nick Shaheen here looking at Roku. First, I want to hammer a point home of being prepared. Charts have a lot of information, and if you don't use them, you are missing information, and your opponent, because you do have an opponent every time you trade, has the information. So this is the S&P today. People got surprised because it was up in the morning before the market opened, and then it fell out of bed. So some people, I guarantee you, chased the open and then got stopped out and then bought puts at the bottom, and they did exactly the wrong thing. So two things: you don't chase where you're not supposed to chase, and you don't buy puts or defend or panic where you're not supposed to. So how the hell do you know? If you don't know, that means you're hoping your trades will work out. If you don't know, you should get some help, and you should find somebody that can help you with that. Learn the charts or follow somebody who actually provides this information. Every morning I provide this information for my team. So it's usually a 15-minute or a 30-minute chart, and I'll put words on there. So in the last few sessions we've had, so this is a 30-minute chart, the S&P, and I said that there is a risk of doing this, and then there is a risk of doing that, and then I have support, a couple of supports, and I said resistance, and then another level of resistance. So this morning the pop, I forgot what the trigger was. In unemployment or claims, new claims, unemployment claims, and we hit the resistance twice and then failed miserably. I'm sure there was some headline, but who cares? We've hit the resistance. They sliced through one level of prior resistance. They should have held this for a little bit, but they didn't. They sliced through a couple of supports, but they have a big cluster of support here, and they held. So get prepared. If you don't know the stuff, then you should get somebody who can help you with that. Sign up. Down below there's a link. You can sign up to the chat room. Part of the chat room is this. It goes out with the rest of the indices, so I'd go into the day knowing what the hell's going on, and I'm not flying blind. Speaking of flying blind, holy cow, flying Roku. My goodness, right? So before you jump down my throat, I am short, but with a caveat. So I did a short trade a few days ago, and it worked out. It paid. I didn't book it. I should have, but I didn't. So my short was on this level right there. By the way, I'm not shorting the company or its prospects. It was just a price action. So I saw the inverse head and shoulder forming, and my bet was, and I wrote it up and shared it, and I said, I'm shorting it with a very tight stop. I'm shorting it at 133 with a very tight stop. So, and then as soon as I smelled the breakout, yesterday I spread it and I went long as well. So the damage is very, very minimal. I basically stopped myself out ahead of time, kind of. So now what? So the bump happened, and it's like a inverse head and shoulders. You can totally see it here. They had an attack. They had another one. This one wasn't as bad, and they came back to the same zone, and they breached through the zone. So ideally, if this kind of breaks the neckline, but I don't care about this. Technical analysts do. I'm self-taught, so I will use here. I'll tell you what I'll do. I'll tell you how to take care of that. Get a pen that's fat enough, and you can just draw a perfect neckline. Look at that. Perfect. So you have an inverse head and shoulder. Basically, the bulls are prevailing. Higher lows, attacking a neckline that has been a failure 1, 2, 3, and this is the fourth time they broke above it. Right. So ideally, the technicians will tell you it should rally about, if this is equal to whatever this is. So I usually say, okay, but they're not going to do it in one shot, although today they tried. Holy cow, was it a big day. Is this a coincidence? I don't know. Is this a coincidence? I don't know. So this level where they stopped, it has been pivotal for a while. So I'm going to stay in my short one more day because I mitigated the damage, and it's very, very minimal, I promise you. So it's a trade on price action. So I could get lucky, and it could fail up here like it failed here, but there's no evidence of it. So if I'm long, I can stay long because technically the overshoot should have legs. So ideally, if you're long, it's going to do this, maybe breathe a little bit, and then finish the job in a couple of stints. There's a gap up here. Maybe they'll go after it, maybe they won't. But this is what Roku is doing here. I don't know if there was news or not, so you probably know. To do this on a tough day, That's pretty impressive. However, it seems like the traders these days, the frothier the name, the more appetite they have for it. So it is, even though the VIX is high, this shows that they're not scared. Scared markets don't buy froth. They don't buy perceived froth. The stocks like Zoom, like Roku, they're perceived froth. Why? It's not perceived. They are froth. I'll show you why, what I mean. What is froth? It's hope, a lot of hope in the price. So this is not as bad as the other ones. What are we looking at now? Okay, Roku. There's no price to earning, which is pretty concerning. They've been in business for so long, and however, it's only 14. I say it's only 14 times sales. So the stock price is only 14 times its total yearly sales. That is not aggressive. Well, that is not gross and disgusting. Like Zoom. I keep coming back to Zoom. Zoom is like 110 times its sales. So you're prepaying 110 years worth of sales for the privilege of owning the shares today. 110 years worth of sales. That is whoa. I mean, that is whoa. Okay, so this one is not that gross from that perspective, but the markets are buying scary stuff. So today the stocks were down, the indices were down. If you look at the names that were up, so this was up 12%. I bet you Twilio was up. I had no power all day, so I'm looking at this. So Twilio was positive. I bet you Zoom was positive. Okay, Zoom is up 1.2%. So what other names? I'm going to pick, I don't know. Was the XLK positive? NVIDIA. Yeah. NVIDIA, whoa, new all-time highs. Holy macro. Okay, so was that system-wide? Was Intel, no, Intel was slightly down. How about AMD? AMD is up 7%. What the Okay, so there we go. I'm long AMD, so that's not bad. So here we go. They're frothier. They're grabbing just... AMD is not as expensive as NVIDIA from the price to sales perspective. It's now 9, and I bet you NVIDIA is at least double. At least. And I'll tell you what that means to me. Oh, more than double. Almost 3 times. So 24 prices. So this is more expensive than the Roku. It has a PE. So from that perspective, okay, they're making money, but the PE is 76 or 78. It doesn't matter. It's a growth company. I don't want it to be profitable. I don't care. But the price to sales is pretty hot. So basically, they're planning, they're hoping that the future sales are going to blow up, basically. And I hear that they have all the right chips and in all the right places, so I cannot dispute it, but I also cannot buy it. So I should admit, if I'm not long NVIDIA, that, hey, I missed it. I question the people that are buying it up here for an investment. I mean, do you ever think it's going to continue on and on and on? I know you've seen it happen in Amazon and in Tesla, but these are unusual, people. I know they're rallying, and you could make money in a couple of days, but if you are buying for an investment for a long period of time, you have a longer time frame than I do, that's for sure. And I'm not that old. Okay, anyway, so back to Roku. Great move. If I'm long, I can stay long. I would probably lock some prices. So if I bought calls, if you don't know how to lock call profits by selling diagonals or turning it into a no-lose situation to where like there's no way you cannot have your profits or part of them, then you should reach out. Again, the link is down below. Nick signing out.